Okay, we are live now. Let me share the link so everybody can join. I don't want us to really start late today, so it's okay. Sorry, I don't want us to start late today, so I'm going to be very fast about it. Okay. Let me share. I'm sharing it now, so they should join any moment. So let's just wait for a few seconds, and then we should have everybody shoot a few more seconds, and then okay. So just give a few more seconds. Has the message delivered? Okay, the message is delivered. Right. Yeah, so let's just give about 60 more seconds, and then once we certain that the 60 seconds has elapsed, we'll just get into the thing proper. So today we'll be talking about chart patterns. So let me put it on my screen like this. So we're going to be talking about what? About chart patterns, how to identify and read chart patterns with ease. Okay, that's what we're going to be doing today. So like I said, we have 30 seconds more. So the moment you are done counting, we should start the training proper. Okay. Okay, so I think the time has count down. Okay, so if I can see one person has joined us, if you're that person, kindly type 111 in the comment section. Let me know that you can hear me loud and clear, and then we'll begin immediately. Although I'm certain that my mic is audible, so it's not really going to be a problem. Okay, so we're going to be starting immediately now. Like I said, today we're going to be talking about what? About chart patterns, how to identify and read chart patterns with what? With ease. Trust me, guys, everything we've been doing from the day of this training till today are all connected. Okay, if you can look at the procedures at which I was taking you guys, the flow is all what is all connected. So that's why this chart pattern is more like a continuation of way of learning, because at the end of the day, you discovered everything is what is connecting. If you observe, when we started with candlesticks, the anatomy of candlesticks, we now went to support and resistance. Then from support and resistance, we now went straight into what? Into trend lines. Okay. Then from trend lines, I now taught you how to combine a trend line and a support and resistance in order for you to conduct excellent research. Okay. So in this particular training, I'm going to teach you about chart patterns. Okay. I can see one person. If you're the one, kindly drop 111 in the comment section. So you can hear me. Okay. In this particular session, I'm going to teach you about chart patterns. Okay. Then the moment you learn about chart pattern, it's more like giving you an added weapon to the battlefield. Imagine going to the battle. The first time you came into the battleground, the time you started this mentorship session, so as if you're going into the battleground. So the moment you enter the battleground, you're only given just a sword. Okay, the moment you gave you the sword, we did the first section. I gave you a shield. Okay, we did the next section. I gave you a gun. So the more we keep on advancing, the more I am giving you enough of. Okay, thank you. I can see 2 people already. Okay, thank you, Shining. Mr. Humble, thank you, Dominic. Okay, I celebrate you guys for being here. Okay, so like I said now, the essence of this particular thing is more like I'm giving you much more sophisticated tool that can help you to overcome the battle. Because what battle are we fighting here? We're fighting a battle of profitability. We want to be profitable trading cryptocurrency. Okay, so all of these things I'm giving you now are more like equipment that can help fortify you for the battle ahead. Number one, I gave you the candlesticks, that's anatomy of candlesticks. Number two, I gave you the support and resistance. Number three, I gave you the trend lines. Number four, I taught you how to combine the trend lines and the candlesticks and the support and resistance. Number five, I taught you how to identify breakout structures. All of these things are deliberate steps in order for you to become very good at the end of the day. Okay, so today now, in order for us to continue, we're going to be talking about chart patterns. Okay, it's a very simple and interesting topic, and I'm very certain you would love it. Okay, so let's get to the course proper. I don't want this course to be lengthy. At most 30 minutes, we should be out of here. Okay, so this is it now. What are chart patterns? Chart patterns are setups formed by a group of candlesticks on a chart which have repeatedly formed over time and help inform the traders on the next movement of the price action of the what of the asset. Look at it. Chart patterns are setups formed by a group of candlesticks. Now, a single candlestick is so when a single candlestick is standing on its own, it's just a candlestick. But when they come together to form a pattern, to form a what, to form a setup, that's what I mean by what by candlesticks, what by chart patterns. Because I can tell you that in as much as you see all of those green lines, but by the time we start talking about chart patterns, you observe that some of those green lines they used to form a pattern like that. If you have been following through all the live session, you'd have seen me talking about something like M pattern, W pattern, head and shoulder pattern. All of those patterns are patterns that have been formed by a group of candlesticks. So those various patterns, those various forms, those various setups have an information they tell the trader. So by the time I'm done teaching about the chart pattern, just as it's a setup formed by a group of candlesticks on the chart, which have repeatedly formed over time. Remember, I said the idea of technical analysis is for you to analyze what have happened in the past in order for you to predict what is going to happen in the future. So these patterns now, traders have observed that it has been happening over time. And anytime a group of candlesticks come together to form a particular alliance, to form a particular shape, there's a particular direction that the coin intends to follow afterwards. Okay, so that's exactly what we're talking about chart patterns. So the moment I start explaining to you about chart patterns, you're going to understand that you're going to see. I'm going to show you an example. Don't worry, I'm just trying to give you create an introduction. You're going to understand that the chart patterns. You see all those lines. See, by the time we talk about this number, you're going to understand that all of those drawings, all of those irregular drawings you're seeing, some of them could actually be chart patterns, but because of you don't have the eyes, you don't have the knowledge about them, you just think maybe they're just casual occurrence. But from today's henceforth, you're going to understand that they are not casual occurrence, rather they are information that the trader can use in order to make what informed decisions. Okay, before now you never knew that. Maybe you kind of knew, but then you didn't know how to use trend lines. I taught you how to use trend lines. So this particular aspect, I'm going to teach you how to identify chart patterns and how to also use them in order for you to make profitable trade decision. Okay, so let's go to the next slide now. Types of chart patterns. Okay, they are basically, so this is supposed to be three. There are basically three types of chart patterns. The first one is what is continuation chart patterns. The next one is reversal, and the next one is what is bilateral chart patterns. Okay, these are basically the three kind of chart patterns we have. Okay, I'm going to explain each of them individually. I'm going to tell you what the continuation is, what the reversal is, and what the bilateral chart pattern represents. Okay, sorry, I want to. Okay, sorry about that. Okay, so these are basically what the three types of chart patterns we have. I'm going to explain each of these things to you. Okay, so let us go to the first one. The continuation chart patterns. Okay, this now let's explain what it is. The continuation chart patterns are patterns. Sorry, what's this on my screen? Okay, the continuation chart patterns are. I think I need to make this big so I can read what I wrote here. I'm not really seeing it clearly. Okay, I think this is better. Okay, the continuation chart patterns are patterns that indicate a continuous flow in the direction of the underlying price movement. That is, when a continuation pattern happens along an uptrend, it means the price is most likely to keep heading upward. Likewise, in a downtrend. Examples of chart patterns are what? Of continuation chart patterns are flags, hedge patterns, and pennant patterns. I'm going to show you all of these things practically. Now, what am I trying to this continuation patterns? Now, remember, I said the idea of cryptocurrency is for us to be able to know the flow of the market. So let's assume that the coin is in what is an uptrend. Now, the moment the coin is going to an uptrend, and then you discover a chart pattern for me, probably among the chart patterns I'm going to be teaching you now, you don't discover that a particular chart pattern has formed in an uptrend. Okay, now by the time you look at the chart pattern and then you observe it and then you're able to identify that chart pattern, if it is a continuation chart pattern, just as the name implies, it means the uptrend is going to continue. The underlying trend or the underlying flow of the market is going to continue in that same direction. Okay, just like saying, let's assume let's assume we're going from Jos to Port Harcourt. Okay, so let's say from Jos now we started driving, and then we got to maybe you might not know this terrain, but this just like a straight route. So from Jos, the car was driving, and then the car got to Maraban Jama. There's a place we call Maraban Jama along the way of Jos. Okay, so when the car got to Maraban Jama, then you now observe there's a chart pattern there. The moment you observe that particular chart pattern, and then it's a continuation chart pattern, it means that the driver is going to keep on heading straight to Port Harcourt. The journey is going to keep on continuing. That's what a continuation chart pattern. The moment you see a particular kind of chart pattern forming, it means, or it's giving you an indication that, oh boy, this trend is most likely going to continue. Okay. That's just what the continuation means. These are chart patterns that indicate a continuous flow in the direction of the underlying price movement. So if the coin is facing upward, if the coin is going upward, and then a particular chart pattern was formed at that particular position, have it at the back of your mind that that particular price movement is going to continue in that same direction. It might come back to retrace more, but then the whole momentum is going to still continue in the upward movement. Okay, so also in the downtrend. So let's assume that the coin is heading downtrend, and then a pattern was formed, and then you're able to identify the pattern to be among the continuation chart patterns. It means that the downtrend will still continue. That's what I mean, a continuation. So if the trend is going upward, and then a chart pattern was formed, and then you identify that particular chart pattern as an uptrend. Okay, thank you, Godwin, for coming. I see you. I celebrate you. Thank you. Okay, so the moment a coin is going downward, like I was saying, the moment a coin is going downward, and then you observe a chart pattern forming. Remember, I say a chart pattern is an accumulation of candlesticks that form a setup. When more than 3 candlesticks come together, and then they form a particular setup, they form a particular a particular pattern. Okay, then you should inform me that okay, this particular coin, this already is down form for this downtrend. I mean, this downtrend is most likely going to continue going down. That's exactly what the chart pattern is. Okay, the continuation chart pattern is, and then we say we have different types. We say we have the flag pattern, the wedge pattern, and then the pennant. Okay, the pennant patterns. Okay, I'm going to explain each of these to you, and I need you to actually give me your attention, because it's something that is very, very easy to understand. But first of all, you need to give me your attention here. And then, of course, if you don't get it the first time, I encourage you to watch the video a second time so that you'll be able to understand it. Okay, so let's look at the next one now. The next one, I say we have 3 types, right? Now the next one is a reversal chart pattern. The reversal is just like the opposite of the continuation. Just as say the continuation, whenever the continuation happens, it means the trend is most likely going to continue. Okay. Now, whenever the reversal happens, the reversal means that particular trend is about to change to the opposite direction. That's why I define it as what these are chart patterns that indicate an opposite flow in the direction of the underlying chart price movement. So let's assume the price is heading upward, and then the price is going upward, and then you observe that a particular pattern has formed. You identify that particular pattern, and then it falls under the category of the reversal chart patterns. It means that particular trend has come to a point of exhaustion. The trend is exhausted. A new trend is about to form. So if we are in the previous, like I said, when a reversal chart pattern happens along an uptrend, it means the price is most likely changing direction into a downtrend. That's just what reversal means. Like I said, let me give the same example again. Let's imagine from Jos here, I'm going to Port Harcourt. Okay, so the moment I enter my car, then I started driving, and then I got to Maraban Jama. Then that particular Maraban Jama, I discovered that a group of candlesticks come together to form a particular setup. And then the moment I was able to identify that particular setup to fall under the category of reversal, it means at that particular point, I cannot continue going to Maraban Jama to Port Harcourt. I will turn back, I will reverse at that particular point and start heading back to Jos. That is exactly what this chart pattern is. Okay, so examples of chart patterns I think there's a mistake. It's supposed to be examples of reversal, not example of continuation. I think there's a typo error. Examples of reversal patterns include the double tops and the double bottoms. If you've been following all my sections, you understand that I was always talking about double top and double bottom. Those are patterns that I've been able to identify. Okay, so we have the double top and double bottom. We have the head and the shoulder. Then I'm going to show you all of this. Is just picture it like this. As you're hearing double top, it means the thing has 2 tops. As you're hearing head and shoulder, you already just the way you have your head and your shoulder, you're going to see the pattern exactly like that. These patterns are named based on how they look like. Okay. And we have the triple top and the triple bottom. All these are a reversal pattern. So the moment you're conducting analysis, and then you looked at the chart, and then you discover that this price is heading downward, and then a head and shoulder pattern was formed. More have at the back of your mind that something's about to happen, that this thing is about to reverse. Okay, so that's already this. Now, this you might be asking, how do people know about this? It has been happening before. You don't need to worry about it, you just need to learn how to use it, because before you were born, before I was born, traders of the ancient have been using it. Okay, so we are only just since they've already identified the pattern, you just need to watch, you just need to flow with it. Okay, that's exactly what technical analysis does. They observe previous pattern that has happened before, and then they observe that anytime a coin forms this particular pattern, it tends to either change or either continuous. Okay, so they're able to put all of this in right, and then they made it easier for us to learn. Okay, so you can decide to go and study how the chart patterns come on board. But me, I'm just trying to show you how to identify them and how to use them. That is my work here. Okay, but then for the sake of knowledge, you can still explore and understand how the whole all of these candles came aboard and who discovered them. But at this particular moment now, what we are basically concerned about is how to use them and how to make money with them. Okay, now the next one we have is is the bilateral chart patterns. Okay, these are chart patterns that either indicate a continuation or what, or a reversal. The direction of the price movement is dependent on where the breakout structure occurs. Okay, example of what, the triangle patterns. Okay, now maybe asking, just like this bilateral now is just like either ways. It's neither a continuation or what, nor a reversal. Pardon my mistake. I think I made a mistake. Instead of saying examples of bilateral, I said an example of continuation pattern. So pardon the mistake there. Okay, so that's just it. A bilateral is just like the coin is most like, if you see bar, is two-way. Whichever the coin, I've already spoke about breakout structures. Okay, so the moment that particular chart pattern is forming, then have it at the back of your mind that this one, it's not, there's an indecision. You don't know that the coin is going to go up or it's going to come down. So it's dependent on where the coin broke out. So the coin breaks out through the up, it means the trend is going to continue upward. If the trend breaks out through the down, it means the price is going to what? Is going to reverse. Okay, so that's why they call it what? The bilateral. Okay, so in the next slide, I'm going to show you some examples and how each of these charts looks like. Okay, how each of these patterns look like. And then by tomorrow we're going to do what, practical. So I'm going to show you this chart practically and how they look like or what on the chart. Okay, so let's look at it now. Okay, so this is it here now. If you cannot see this, I want you to actually I want you to probably tilt your screen or come closer to the chart. Okay, to the screen. Okay, so look at it. Examples of continuation. Number one, we have the falling wedge. Okay, look at it, the falling wedge. Meaning, anytime if you can look at it now, the black ink there represent the price action. Okay, when you look at the price goes up and then it begins to form a small shape like that. And then look at it, there are areas of value. Remember now, to draw this chart patterns now, but it is my trend line. So all of this red line, all this small red line you're seeing is what is my red lines. Forget about all this in the right entry, target, and stop loss. That just tell you how to trade with it. Okay, so the moment you look at your chart and then you discover that this particular pattern is forming, the coin was going up and then it got to a point where it stopped going up, and now started forming a small downward consolidation like that, just as you're looking at it in the picture like this. Okay, it means look at it, the flow of the coin is upward. It means this is a continuation pattern. It means the price is going to keep on going upward. Are you getting it? They call it the falling wedge. Okay, now look at the next one and the one below to see the rising wedge. Okay, so the moment you see the coin is going downward. Now look at the movement of the arrow. I wish I can indicate. Probably tomorrow I'm going to be the indicator of this. Okay, I want to just familiarize with it. Okay, now look at it. The first one is the falling wedge. Then the second one is the rising wedge. That's one below it. Now you can look at it that a straight line. The trend is actually, look at the long that's like the handle. The long handle is indicating that the trend is downward. The moment the trend is coming downward, it now got to a point of value. It now started doing a tight consolidation. Then it bettered this particular shape. So the moment you use your trend line, then you're able to draw. Then this is the pattern you see. Just have it at the back of your mind that it is a continuation chart pattern. So for the first one we did, that is for the falling wedge. You understand that anytime the falling wedge happened in an uptrend, is most likely the trend is most likely going to continue upward because of what we say it's like a continuation pattern. Then if the rising wedge forms on maybe the rising wedge, just like the opposite, this is not be careful. I want you to actually understand this particular thing. Look at it now. The first one is forming in an uptrend. The second one is forming in a downtrend. All of them are signaling a continuation. Because look at the first one, the flag is heading downward. The trend is heading upward. The first one, the trend is heading upward. Then there was should I call it a redistribution? The coin was trying to it was trying to breathe small. Okay, and then that particular period of breathing, it now formed a small consolidation. And then when you use your trend line, then you joined it, and then this is once you see a pattern like this form, it's tell that this is the falling wedge, and then since it's happening in an uptrend, it means there's going to be a continuation. Okay, now look at the rising wedge. The moment the rising wedge, something like this happens, and then you sit in the downtrend, it means the trend is going to continue. Okay, that is the first one. Now the second chart pattern we have for continuation is the bullish rectangular pattern. Okay, please, if you can see my screen, if you can see these structures, I'm going to still send this thing on the group chat. Okay, so you can better zoom it and look at it. I'm going to share it on the group chat. But if you can still see my screen, let me know you can see. Just type 222 in the comment section. So let me know you can see it. Okay. But then I'll see as much as possible to send the material to you on the group chat so I can see it very, very well. Okay. Now these things are very, very powerful, very, very powerful, guys. Very, very powerful. Now look at this one. They say the bullish rectangle. Now this bullish rectangle can also be called a bullish flag. Okay. Some people call it the bullish rectangle. Some people call it the bullish flag, whichever one it is. But they all call the flag pattern. If you just go and search flag pattern, you're going to see it as the what, as the flag pattern. So this bullish rectangle, and then this last thing you're seeing at the end, there's this one that is standing on its own, this bullish, this flag pattern, they're all the same thing. Just that one of them, the flag is what is slanting down, and one of them, the flag is what, the flag is standing what, upward, is standing straight. Okay, that's exactly what a flag pattern is. So it's the same thing. It's indicating what a continuation. So look at the bullish rectangle. And the moment the bullish, now look at it, these patterns, but they're almost similar. But just look at is the shape that varies. So that's why you need to be very, very careful. Okay, somewhere say you can't see. Okay, if you can't see, I think you need to increase your resolution. Okay, you know, YouTube has a way of minimizing data. Just go to your setting and then you see resolution. I wish I can show it. Probably when I'm done with this session, I'm going to take a screenshot and show you. Just go in your setting and then increase it from 720. Increase it from 720 to, it's on auto now. If you go in your setting, you saw where they wrote auto. I think it's 720 now. So increase it to a higher resolution so you can see it clearly. Okay, so that's how you can remedy that particular one. Okay, thank you, sir. Thank you. Thank you. But don't worry, I'm still going to send this into the group chat, so it's not going to be a problem for you. Okay, so this is just it now. Okay, look at, so this bullish rectangle, what does it mean now? It means that whenever you see you're in an uptrend and then you discover that the thing was going up, and then it got to a point whereby the thing was not going to happen, and then you're able to draw it. Now look at, if you look at just like one mini those red lines you're seeing there are all trend lines, because what used to draw your chart patterns are trend lines. Okay, this black line are the price action. Okay, don't I want you to actually focus on this. Just focus on what I'm doing here. Okay, now the black one is those red and green lines you show on the chart. That is this black line that you're seeing here. Then this red line you're seeing here is it's just I'm using my trend lines in order to connect the areas of value. So if you can look at it, we had area in each of these in between the two red lines. You discover that there was a series of areas of value there. So the moment you connect the areas of value, then you see something like this. Have it at the back of your mind that it is a continuation. That is for this rectangle now. They call it a flag. So the moment your coin is going up and then you see something like that forming, have it at the back of it. Okay, this already is not form like this now. It means that this trend will continue. Likewise, the same thing. Look at the down one. It's just like the other way around. If you now look at it in the downtrend, let's say the coin is coming down there, it got to a point, and now form a pattern like this, and then you're able to connect the areas of value, and then it gives you a picture like this. Have it at the back of your mind that this particular trend is going to still continue downwards. Okay, so that's exactly how to use. Now let me go to the last one, and this one is standing alone. It's the same thing. You can look at it just like it's the same thing with this rectangle. Just this rectangle is standing straight. You can see the white one is tilting small. Okay, so they're all the same thing. They all obey the same law. So you can look at it. The bullish flag pattern is in an uptrend. Remember I said the continuation. It shows you that okay, this particular pattern is going to continue. It's going to continue going on the direction to actually go in the first place. So the first one is actually going upward. So the moment the chart pattern happened, it's an indication that look at the green arrow. It's an indication that okay, this price is going to go upward. Okay, and look at the down one too. It happened in the downtrend. All of them are flag. Okay, one is just like they turn it upside down. Okay, but they're all flags. So the moment you observe it happening in either the uptrend or the downtrend, it's still going to indicate a continuation. Okay, now let's look at the next pattern. And the next one is the bullish pennant. Okay, the bullish pennant. Now this bullish pennant now is also a very, very sweet tool. Again, the moment you're conducting analysis and then you discover that on your trend line or on your uptrend, you discover that a pattern like this is forming. Now observe it now. This thing is different from the falling wedge. Look at the falling wedge. The falling wedge, the two ends, in as much as they're coming close, they would not join. That's one picture. That's how you know a wedge. Just like the name implies, the wedge. That's the shape of a wedge. Remember, I told you that each of these patterns actually got their name from what they represent. If you know of a pennant, you can also go and check a pennant. This is the shape of the pennant. You can see they say bullish rectangle. You can see all of them. It's actually looking like a rectangle. If you can look at the wedge, that is the size of the wedge. That is how a wedge is. It's falling, but the tip cannot join. Okay, but look at. I want you to pay attention to this particular pennant. If you look at the pennant now, both the upline is slanting and the red line is slanting. So it's more like it's giving you. It's not really. Do you know what I'm saying? You just pay attention to it, because by the time we get to a triangle, you might say, "Kai, this one not be triangle. It's not triangle. This is the pennant." There's a triangle. The triangle is the one that is a bilateral or chart pattern. But this pennant now, look at the shape. The thing is not really both sides are actually tilting. Okay. Just look at it very. So you observe that both sides, both of the red lines that they used to connect to, they used to draw the chapters are actually what are actually tilting. Okay, so pay attention to this particular one. Okay, the moment a pennant forms in an uptrend, it means the trend is going to continue, and then the moment it forms in the downtrend, the trend are going to continue. Okay, so now let me just explain these things. This top entry you're seeing there. Now, this is a chart just showing how to enter what a how to enter, how to trade with a chart pattern, with a continuation chart pattern. It means that once you observe a continuation pattern happening, this point you see entry, that is the point you're expected to enter the market. Okay, the moment you observe a continuation pattern, if you look at it carefully, you see where the right entry means the moment the coin break out, that is the point you're expected to enter. Because once you discover that, okay, it has broken out, you're now convinced that, okay, this coin is going to go up. Okay, then they show you look at the target. That's maybe when it has put your stop loss. Okay, don't worry, I'm going to teach you about stop loss. Okay, stop loss is just what you put in case your analysis backfire. Maybe you say the coin is going to go upward and then the coin started going downward. The stop loss is going to help you prevent bigger losses. Okay, I'm going to teach you all of these things in fact, we're almost done with technical analysis. Not really done per se, but then most of the complex we're almost run up with. We're starting risk management and other things like that before we begin to see how we could practice real time. Okay, so that's just exactly what each of these entries. So if you look at the bearish pennant, now you discover that they say what entry, meaning since it's bearish now, we're expecting that the coin to the price should keep on heading downward. Okay, so before you enter the market, you must wait for it to break out of the pennant. So the moment you break out of the pennant, then you can enter the market and wait for it to rally downward to your target, and then you take profit. So that's exactly how you trade with this particular continuation pattern. Okay, now, like I said, it's the same thing. This flag and this rectangle are all the same thing. It's just that one of them is tilting, one of them is not it's not tilting. But then if you can still differentiate it if you like. You can call one a flag, you can call one a rectangle. I mean, I call all of them the same thing. Okay, so that's just it about the continuation chart pattern. Let's look at the reversal. So this is the reversal patterns like that. Okay, so the first one is the double top. Now, if you're very, very conversant with all my training, if you've been practicing and present from all my training, you observe that I've been hammered about double tops. Now, what does reversal means? Anytime the pattern forms, it means that the trend is about to get exhausted. Now look at the first one. They say double top. The coin was going up, it went up, it formed an area of value, it came down, it got a support, it went up again, and then it could not surpass the previous high point, the previous high point he had, the high area of value, the previous one. So it formed a double top. That's what they call it, a double top. So the moment you confirm a double top, it means that the coin is going to go down. Even as this one, I'm very, very cautious because I've used it practically in this particular class. Okay, in all our previous section, if you're attentive enough, you'd have seen me talked about double top. Okay, so this is how a double top is. When you discover, okay, the price, remember this is just a book illustration. Okay, this is just a book illustration. The thing might not come exactly like this, but I'm trying to show you so that you'll be able to have an idea of how it is. Okay, so remember you discover, okay, a coin went up, it touched a particular resistance, it came down, it didn't go down much, it now went up again and touched the same level before plummeting. Then you know that, okay, an M pattern has formed, so I need to prepare for entry. Now, where do you enter? Now you can see the neckline. If you can look at it, you see the neckline. Just looking at this thing, you're going to know when to even enter self now. Okay, so you can see they say this is where you want to short the market. Okay, like I said, all this reversal is mainly, this particular reversal and this double top now is mainly for those that are short, because of course you cannot buy high and sell lower except you're a futures trader. Okay, so this particular one is when you start doing futures before you start paying attention to it. Okay, now look at the second one. They say the double bottom. Now double bottom is where you use as a spot trader, because the double bottom indicates that a downtrend is about to get exhausted, that a downtrend is about to change to an uptrend. Okay, you can see it here. The trend was coming and then it got to a support. It tried to go up, but it didn't go up early. Then it came back and tested the same support that it has previously formed. Okay, then from there it started heading upward. Okay, so you can look at it. So where you're expected to enter the market is at the neckline. These are just the various sources of trading support, of trading chart patterns of reversals. Okay, so you can look at it there, the double top and the double bottom. The double top indicates that the uptrend is about to change to the downtrend. Then the double bottom indicates that the downtrend is about to change to the uptrend. Okay, that's exactly what the reversal pattern means. Okay, now the next one is the head and shoulder. Now look at the head and shoulder. It's the same thing. You can see the head there. You can now see the two shoulders. Okay, so the moment you see a coin go up and then it came down, the coin was going up, and then it touched it touched a resistance. It came down from, but then the force was not enough to push it downward, and then the price now moved higher, and then the next area of value was a bit higher than the first area of value. You can see, I'm just trying to explain this chart pattern via words or via audio. Okay, so you can look at it. When the price went up, it met a resistance, it came down, it could not go down very well, it now went up and surpassed the previous resistance. Then it now came down again, and then as it was coming down, it now came down to the same level as the previous support. That's why you see the neckline there. Are you getting me? Now, even if this thing is a bit technical, I want you to just pay attention to it. Okay, in due time, what you're going to understand it. Okay, it's not something that is not difficult. Okay, so look at it. Yeah, I'm not expecting anybody to get it at the first instance, but if you can get it, fine and good. So you can look at it. When the coin was not coming down the second time, the point at which it formed a resistance was the same area of value that it formed at the initial. So that's what gave us the neckline. You can see there, it's there clearly. It's clearly there. Okay, so the moment it formed the neckline, then the price wanted to go up again. Then the moment it was going up again, it now met a resistance at that particular point of the first shoulder. You can see there. So the moment it formed the first shoulder, just know that it has formed a head and neck shoulder pattern. Okay, so what it's going to indicate to what is going to be a change in momentum, a change in the trend. So you can see when an uptrend. So whenever a head and shoulder happen in an uptrend, have it at the back of your mind that what the trend is about is going to change immediately. Okay, so you can see it here, the trend has changed. Okay, so where you're going to enter the market, you expect to, although different people trade this setup differently. Okay, this is just the appropriate way of trading it. But some people, they can just say, once they've seen that the coin has formed a second shoulder, they don't even want to wait till anything get to the neckline, they'll just enter the trade. So far as they've confirmed that a second shoulder has started forming, that's all they needed. Okay, but for the sake of so that you don't just get burnt or don't just make some irrational decision, wait for it to actually reach the neckline and then break the neckline small for it to confirm that yes, the coin is going downward. And of course, this is basically for futures trader, people that used to short the market. But for we that are still buying low and sell high, that's why we now use the inverse head and shoulder. Okay, you can see now the inverse head and shoulder is just trying to indicate, okay, the downtrend is over. You can when the coin was going down, it now met a support. It tried to go up. As it was going up, it formed it met a resistance. Then from the resistance, the coin went a bit downward. Then the moment the coin went a bit downward, it now formed the support it formed was a bit lower than that of the first shoulder. Now went up again, but then the pressure was not much to push it above the previous resistance that's formed. Okay, so when the price decided to come down again, it now came down and respected the support of the first shoulder. I'm trying to explain the inverted head and shoulder pattern now. Okay, so the moment you confirm that this particular pattern is formed, they know that okay, the downtrend is over. The coin is about to enter an uptrend, and of course, this is where spot traders are benefit the most. Okay, because in spot trading we can only buy low and sell high. Okay, this is the easy. Don't rush to go and learn features. Okay, I am actually taking my time to learn features because I know what is involved in features. The money I get, I suffer for the money you get. So I cannot just go and risk to the market because I want to I'm simply posting screenshot. No, I need to actually learn it first. Okay, so actually take your time, master the sport first. By the time you master the sport, learning features is not going to be hard for you. Okay, so you can look at it here. The moment the coin now broke out of the neck, that's an entry position. Then you wait for the coin to rally upward and then you sell. Remember, this is just a textbook illustration. What you're going to see on the chart is a bit different. Okay. Now let me just look at the next reversal pattern. And this one might be a bit confusing for you guys. So I'm going to leave you guys for you guys to figure this one by yourself. If I try to explain it, I might confuse you guys now. If you observe, this is also a rising wedge. I get it that this is also a rising wedge. Now this one I wouldn't say much about it, but I'm going to send you guys the sheet. Okay, so you can see it and then you can compare it with the other ones. You're going to see the difference. If I try to explain this for you verbal, then I might get you confused. So I'm going to leave you guys once you get the sheet, look at it. Look at what is differentiating this particular reversal pattern, this reversal wedge from the other. And remember, we have a wedge. Let me go back so you're able to see it. And look at this. Look at, we have a wedge here. Look at the first one. We have a falling wedge and a rising wedge. They all have now. What is going to make where you're going to see the difference is in the flow of the market. Okay, look at this particular one and look at the rising wedge now. Look at this particular one and look at where the rising wedge happened in when the coin was in the downtrend. Now look at this particular one. Look at where the rising wedge happened when the coin was in an uptrend. Are you getting the difference now? I hope I don't confuse you. I'm just going to try and be much more selective my words here. This particular one and this particular reversal pattern now, when the coin was in an uptrend, that was when a rising wedge formed. Now look at this particular one, the last one we did. Look at it. The rising wedge happened on in a downtrend. So when the rising wedge happened in a downtrend, know that okay, this is what it's a continuation. But once it happens in an uptrend, know that it's a reversal. Okay, this one may be a bit complex, but then trust me, guys, as you begin to look at the market, you're going to get used to all of these things. Okay, even myself, I'm still having difficulty understanding this particular chart pattern, but then we are still trying. And then of course, you don't cram them. Okay, like what I'm doing is I'm trying to see how I can compile good chart patterns, but I'm going to go and print it. Okay, I'm going to print it and then have it, even if it's pasted in front of my wall. So anytime I'm conducting my training, or maybe have a different booklet, even if you can do it. Maybe by the time I send you the list, and then if it's clear enough for you, just go to cyber cafe and then just print it. So that enter your conduction, and then you see a chart forming on the pattern. You don't need to start cracking. What is going to happen here? Just once you just look at the chart and say, what is forming here? Look at your sheet, and then that is all. You must not cram them. Just look at it. I mean, I don't cry. The one I cry here is my peanuts, my head and shoulder, and then my double top. All these other ones, this falling wedge and rising wedge, and then not concerned with them. I just okay. I have my diagram already. It's in hardcover. Okay. So the moment I say okay, a particular pattern is formed, I'll just go and trace it on that particular book. So if I say okay, this is what has been formed there, fine and good, I'm going to trade accordingly. Okay. So that's just the difference. So let's look at the next one, which is the bilateral. Examples of what of bilateral. Remember, I said the bilateral is just what is triangle. Now look, I want you to pay attention to this particular one. Now this thing looks like the peanut, but if you look at it now, do you know why? Do you know why it's not the peanut? This particular one number, the base, should I say the base now? If you look at it, one side of the triangle is flat. For the peanut, both sides are tilted. Okay, both sides are tilted. But one is tilted more than one. That's how a peanut is formed. One of the side is tilted more than another one. Don't worry. By the time you get this, you look at it yourself. You're going to see what I'm trying to tell you. Look at the triangle. The triangle. Look at for this one and look at this ascending triangle now. The up part is what is straight, is flat, is on angle 90. Why is only the bottom one that is tilted. That's what we call the descending chart pattern. So the moment the descending pattern happens, you can look at it. We have 2 entry and two. We have 2 entry and 2 targets, meaning you're looking at for breakout. Whichever place that the coin breaks out, whichever place that the action breaks out is where the price is going to favor. Okay, so the price breaks upward. Fine, and if you observe a breakout, that's why that's why I taught you about breakout structure before now. Because by the time you've observed, okay, this thing is a triangle for me now. You need to be alert. Okay, this time on the triangle has formed now. Let's look out for breakout structure. Whichever place wins, if the bulls win, it's going to break out. It's going to break out above. If the BS win, it's going to break out below. Okay, so whichever side the breakout is dependent on that's what's going to determine your trading decision. Okay, so the same thing with the descending triangle. Look at the descending triangle. The bottom part is flat. It is not slanted. It is flat. It's completely flat. That's what you name it. That's how you identify what. That's how you differentiate the descending triangle from a pennant, because they both look alike. That's why I say you should be very, very sensitive. So you can look at it. It's dependent on the breakout. Remember, I say you don't need to cram all of these things. See, this is the list you shouldn't cram self, man. The listing. Just have at the back of your mind that you should always look out for patterns. Okay, so the moment you discover that a pattern is forming, just go and check on your sheets. I'm going to send you guys a sheet. Okay, so just go and check on it. What is happening here? Okay, this is what is happening here. So what am I expecting? This is what I'm expecting. Finish. You don't need to start cramming. If you have the time to cram, fine and good. But if you don't have the space to cram like me, I don't have the space to cram. Just that along the line, you now get used to it. Okay, but for the meantime, you don't force yourself to cram. Just learn it. Understand and what happens, how to trade with them, okay? But you don't need to cram the structures, okay? Now look at the word on they say what asymmetric. Now what's the symmetric? Asymmetric means both sides, the slants are equal. Remember, for the peanuts, one particular side is slanting more than both sides are actually slanting, but one side is slanting more than the other. Okay, but for a symmetric triangle now, both sides are actually equal. Okay, so you can see then the breakout can happen in any direction. All you need to look out for is for breakout structures. Okay, so that's exactly how you trade. That's exactly how these chart patterns happen. Trust me, there are different chart patterns. They are different, but these are the main ones. Okay, these are the main ones. In fact, the ones that I look out for the most is even my double top. Once I see my double top, I'm okay. You must not see all of them in a particular setup. They can happen all of them will not happen at the same time. They can happen differently. Okay, the moment you say, okay, this is the pattern that's forming, I say, okay, this pattern is forming, this is going to happen. If a double top is happening, fine. If a peanut is forming, fine. If a triangle is forming, fine. Just know that, okay, this is what you need to do once each of these patterns are forming. Okay, so that's exactly how you do these things. Okay, now let's go to the next now. How to use let me show my face more. How to use chart patterns. Okay, this is a very, very simple step. Okay, we're almost coming to the end of this particular training. I didn't want you to exceed 30 minutes, but then we're already at 38 minutes. Okay, so the first one is what? Identify your underlying market structure. Of course, what's your market structure? Either your support and resistance or your trend line. That is the first thing. See, that is the first thing you need to do the moment you open the chart. Look out for your support and resistance and the trend of the market. always the moment you start conducting analysis, except you have become a wizard and you want to start conducting analysis without looking at the underlying market structure. So you need to actually look at the market structure, understand what it is, where is your support, where is your resistance, and what is the overall flow of the market, what is the trend of the market. Okay, so that is the first you need to do in order for you to use chart patterns. Okay, and then the next is what? Identify areas of values. Okay, so the moment you identify your chart patterns, definitely identify your chart patterns has already given you an area for, has already called your attention to the areas of value. Okay, so that's one is still part of it. Identify your underlying market structure. Number 2, identify your areas of value. Number 3, look out for chart patterns. Okay, so once you've identified your areas of value, your support and resistance, then you start looking for chart patterns. Mind you, not every time you're going to see a chart pattern. Not every time, okay, but anytime you see it, it's a much more confirmation that, okay, this coin is actually going to do this or that. Okay, so it's not every time you're going to see it, but the moment you see it, it's more like a confirmation. It's an added advantage to you. Remember, I said that we have a checklist. Okay, that checklist is going to help you whenever you want to trade. You say you carry your checklist before you enter any trade. You say, okay, my support and resistance confirmed, my trend line confirmed. You look for candlestick pattern confirmed. You look for and chart pattern confirm. The moment you have about 4 confirmations, okay, no, this particular coin, I'm confirmed, I'm satisfied that it's going to go this particular way. Okay, so this is just the step of how to use the chart pattern. You cannot just use it alone. Okay, then the next one is what? Wait for breakout. Okay, like I said, if you look at all the, let's go back a bit. Okay, let's go back a bit. I want you to look at each of these patterns. Okay, if you look at it now, the entry is always after the neckline. If you can look at all of them, the entry is not really on the line that helps you to draw the pattern. Is after the price action has broken, after the pattern has the price has broken a particular trend line. That is when you enter. Wait for a breakout. Because of course, remember we said analysis is not 100% certain. So it's possible that sometimes maybe if the market is just like what we saw in the crypto market now, there are certain times that the head and shoulder pattern formed, but because of the fundamentals, the market is already bleeding. The head and shoulder could not even hold. Remember, I said technical analysis is subject to fundamental analysis. Okay, so the moment there's a strong fundamentals, some of these patterns might not hold. That's why you need to wait for breakout, so you don't just get carried away. So the moment you see a head and shoulder forming, don't just say a head and shoulder start forming. Let me buy at the top of this second shoulder. No, you need to wait for it. You see, what about the market buy is that you must not get. See, there's always point of entry. You cannot get the perfect entry point. You can just get a profitable entry point. Okay, you must not. You wait for your confirmation, because of course, look at the point at which if you're, let's assume you're doing the head and the inverted head and shoulder, Imagine if you bought the coin at the entry and then you sold at the target. It's still enough profit for you than going to risk your profit when you say you're buying at maybe this place they say stop, you're buying at this place they say stop, and before you know it now the head and shoulder now decided to plummet. You now end up being a loss. Okay, so let's ensure that, okay, you wait for the pattern to form completely. And how do you wait for it to form completely? Look out for the breakout structure. If you can look at all of this here, the entry point is actually a bit below or a bit above an area of value. So you need to actually wait for a breakout structure before you trade using a chart pattern. Okay, then the next you need to take a trade decision that favors your bias. Okay, so if you observe, okay, you've identified a particular chart pattern, then the chart pattern is a continuation, and then once it breaks out, then know that, okay, you're either going to hold your position or whatever you're going to do, just your trade. That's why I say a trade decision that favors your bias. Okay, that's exactly what you are going to do. Okay, please, if you're hearing me, I want you to send 111 in the comment section, and then we'll continue. Okay, so this is just a word. I'm trying to do. Let me just give you guys a word. An illustration. Okay, so this is just it now. This is an example we did here. This is for FTM. This is a chart we did yesterday. Now look at it now. First of all, I identified my support and resistance. This is the 2 yellow areas you're seeing there, my support and resistance. Then look at the black line. Remember, I already did this yesterday. That's why I didn't take my time to break it down again, because I believe you guys already know how to identify your areas of value already. Okay, so you can look at it. I already identified my areas of value. The black line you're seeing at the tip there is my trend line. Then should I say golden or the yellow box just there was my support and resistance. That's what I've identified my areas of value. I've identified my underlying structures. Okay, then the next thing to do is to look out for chart patterns. And then let me tell you something. Now, anytime you're looking out for chart pattern, but the place that a chart pattern has more credence is when it forms at an area of value. Okay, that's, if you observe that, definitely in as much as the coin can an area of value, a chart pattern can form at any particular point in time, but the point at which a chart pattern has more credence when it forms at an area of value. If you look at this at this particular point now, look at it. The moment look at inside that circle, you discover that there's a what? There's that place I circled. You discover that what an M pattern was formed there. That's a what? A double top. I see now it's forming the chart now. This is a clear example of what of a double top. And what happens after a double top? A double top is an indication that there's going to be a trend reversal. Don't worry, if you go back to your chart, this a double top means there's going to be what a trend reversal. So look at it. When I identify my initially, that's why I say now let me explain something now. That's why I say you need to identify your underlying factor first. You need to identify your underlying market structure first. Because how will you know a trend is about to reverse if you have not even identified the trend in the first place? Are you getting the jack now? So you need to actually identify the trend first, identify the areas of value, identify your underlying structure before you understand. Okay, thank you, Samuel. Thank you. Okay, that's why I need to be very. That's why I always need to actually see. If you need to watch this video, watch it the second time again. Probably I'm speaking fast, but don't worry. Tomorrow we're going to do a practice. So I'm going to show you most of these chart patterns live on screen. Okay, but look at it. I say identify your areas of value first. Identify your support and resistance. Identify your overall trend. Okay, so if you can look at that, even though in this particular trend, I didn't really identify the micro trend there, but it's still there. You can see there. This one I'm looking at now. So you can see, I didn't have identified the trend. It's okay, we have identified the trend. And I wanted to know if actually the trend is going to continue or not. And of course, look at it. An M pattern happened. And where did that M pattern happen? The M pattern happened in a resistance. And apart from happening in a resistance, it now happened at the point where we have our intersection of the macro trend line. That is three confirmations already. Number one, it happened at a resistance. Number two, it happened at a trend. It happened at the resistance. Number two, it happened at the macro trend line. Then number four, we have the chart pattern. Then we saw an M pattern. That's enough indicator tell us that okay, but at this particular point now, expect this coin to go back to the dip. Okay, so these are some of the things that you use to confirm your bias. Okay, thank you, Mr. Shining. Thank you, I celebrate you. I see you. Thank you. Okay. So that's exactly how you trade with these particular things. Okay. So number one, you identify like I said, you identify your support and resistance, just your area of value. Identify your underlying market structure, and of course, here we've identified the support and the resistance, and then we've identified the trend line. Because all of these are going to help you get more information about the market. Okay. Then in as much as if I had known, I would have identified it here. Even this uptrend you're seeing here, I would have identified it. So you know, okay, we're in an uptrend. Okay, so because it's only when we identify that we're in an uptrend before we're able to know that the uptrend has broken. Okay, so we have identified that we're in an uptrend now. So the moment we're in an uptrend, they now got an area of value now. So we wanted to know if the trend was going to continue or not, and then what pattern did we now see? We now, apart from just seeing other factors, there we now saw an M pattern happening. That's a double top. And like I said, a double top indicates a reversal. And of course, look at how it played out perfectly well. The coin reversed. It's not exactly how you trade with these things. They're not hard to learn. Okay, they are not hard to learn. They're just something that you need to practice and then keep on familiarizing yourself with the market. And before you know it, you're going to definitely get it right. Okay, I trust you're getting value and you understand what I'm trying to say here. Okay, so this is it. This is the last thing we have for today. Keynotes when using your chart patterns. Number one, chart patterns at key areas of support and resistance. A key area of support or resistance or trend lines have more credence. I just showed you why it had more credence, because of course when the coin begins to get to imagine a double bottom happening at the support. Remember that at the support now, we're expecting the coin to reverse back. Just try to picture what I'm trying to say. Anytime the coin gets to the support, we're expecting the coin to go back up. Now imagine when the coin when the price gets to the support and then a double bottom was formed at the support. That is two confirmation, because a double bottom tells you that, okay, there's going to be a reversal. It's a chart pattern indicating a reversal. Are you seeing how these things work? So we're meant to discover that, okay, a chart pattern is forming at an area of value, at an area of support or resistance or trend line. Pay more attention to it, because it's likely going to hold more credence. Okay, remember I tell you, see, the market is controlled by human being. So that's why these patterns keep on repeating themselves, because you see all of those green and red line, but all of those green and red line, they are all human behaviors, all human interactions. Okay, some of them are impulsive, some of them are not impulsive. But if you want to master this thing, it's your ability to know that, okay, these chart patterns are whenever they form at a key area of support and resistance, know that, okay, it's most likely to hold credence. It's most likely to be very, very valid. Okay, now that's the first one. And the second is pay attention to patterns, or look for patterns formed on any time frame. Okay, this what I write yourself. Pay attention to patterns from. Okay, what I'm not trying to say this particular point is that these patterns can form in any time frame. Okay, in any time frame. So if you're a day trader, maybe if you're trading on lower time frame, if an M pattern forms, you know that, okay, it's most likely going to be there's going to be a short, let's say a double top forms in a 1 hour time frame. Within that particular 1 hour time frame, it means that the price might most likely go down small. But then, like I said, in a higher time frame, when a particular pattern happens in a higher time frame, it holds more credence. I've already said this about multiple time frame analysis. Okay, so the moment on the 4 hour time frame, you observe a double top forming. Just know that this particular coin is most likely going to go down again because of what the higher time frame is a bit more is a bit more relevant in technical analysis. Okay, especially when you're considering yourself a swing trader. And of course, I want each and every one of us here to be a swing trader. Okay, so that's just how you do it. Okay, pay attention to chart patterns that are formed on any time frame. Okay, but then pay attention to those. Yes, look at the one that are formed in any time frame, on the 1 hour, on the 4 hours. Pay attention to them. But then those that are formed on the higher time frame, they tend to hold more credence than any other one. Okay, so the next one we have is what be flexible. These are things I already said. You be flexible with your imagination. I've already said this time with that number. Okay, be flexible with your imagination. Don't just say because I've taught you that the thing must form an M, you must go and be looking for an M. No, okay, don't just go and fixate your mind that if I don't see an M, I'm not. No. Just be flexible with your mind. Okay, sometimes it might be like that. Sometimes it might be almost okay. Just allow it. Okay, this don't they form like plus or minus na M finish. Okay, just approximate. Okay, don't just say I must see a double top and I must see a double shoulder. No, sometimes the thing might be very, very ugly. You don't even feel recognize the shape first, but then if you just allow your imagination play out, then you can get it. And of course, like I said, if you want to filter the noise, use your line graph. Just change it from the candlestick to your line graph. The line graph is going to help you see the structures very, very well. Okay, now the next one we have is what chart patterns will not always play out as required. So always pay attention to macro picture. Like I told you now, the chart patterns they're just like every other technical tool. They might fail, they might not fail. Okay, so that's why you always pay attention to the macro picture. Okay, pay attention to fundamentals, pay attention to news. If you're trading, even if it's once in a day, the moment you want to enter a trade, just go and check on Twitter, #crypto, what's happening in crypto. If the news is good, fine, enter the market and then you can believe the chart patterns. But then once the chart pattern forms in the midst of a strong fundamentals, the coin is most likely to send back to the bottom. Okay, so always pay attention to chart patterns. They're very, very good. Okay, they're very, very good, especially when you use them for a confluence. Maybe when you have your support, you have your resistance, just like we have in that example I did. You can see how the thing was. We had multiple confirmation telling us that the coin was going to go down. Okay, so these are things that you need to actually look out for. Okay, now pay attention to the macro picture. The last one we have is do not use chart patterns to justify your trade decision. Use other tools too. Let me go back and I think I need to explain this one very well. Now look at this part. Look at this particular chart now. Normally, someone that does not need to just say an M down from will just go. But me, I did not just say this coin was going to go down because of just M. In fact, the M was one of the last things I did. Chart patterns are one of the last things you're going to look at for as a crypto trader. Okay, so the first thing you need to do is to check other tools. Which other tools are you going to check? Your support, your resistance, your trend line. These tools are very, very important. Okay, so the moment these 3 tools have confirmed okay, this particular coin is going to go down, then that's when you now start looking for chart patterns. Don't just rely on chart patterns. Ensure that the chart patterns actually forming at an area of value, because the moment it forms at an area there's no area of value, it is most likely not going to hold. Okay, it's most likely not going to yield any serious. And of course, most chart patterns form at area of value. Okay, most times. Okay, but if they don't form at an area of value, see they serve the same function. Okay, but like I said, the ones formed at an area of value tend to have more credence. Okay, now let's look. Like I said, just look at it. This part, like what I was trying to say the last one, that don't just use chart patterns to decide what they're going to do. No, confirm your bias with other indicators. Confirm your bias with the support line, with the trend line, and other tools like that. Don't just say because of we have seen an M pattern, the coin is going to go down. No, it's not like that. Okay, and that's just it. So let's look at the next one now. Of course, beautiful. Practice, 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 guys. See, guys, if you want to know this thing, becoming a master, practice. I can talk from now to tomorrow. I can be doing for you guys analysis, but then if you guys do not practice, there's no way I'm going to come up put this in your brain. So I'm trying on my own part to that I simplify this thing for you guys to understand. But then the only way that people are going to understand it is when you practice. See, you know one thing about practice. The moment you want to practice, you're going to start seeing difficulties. In as much as I'm explaining it with Swift, like very easy like this, because of me, I've gone through the pain, and then I'm even still going through the pain. Okay. So if you want to just go and look at the chart at first glance now, it might have difficulty understanding it. It might be difficult for you. Okay. But when you keep on practice, you're going to familiarize yourself with it. And before you start having the eyes to see it. I can tell you that there are certain times that I'll look at the chart from morning to tomorrow. I will not even see an M pattern. I will not even see a head and shoulder pattern. But of course, as I began to practice, I began to see it at a glance. So the moment I go look at the chart, okay, I don't see an M, I don't see head and shoulder pattern. As simple as that. Okay, so these are things you need to actually pay attention to. Okay, very, very important. Okay, what next again? I think that's all. So thanks so much for being here. I can see we're actually four, but now we are just two. Okay, I celebrate all of you that have been here, and then I really wish to see you guys succeed in this thing. But like I said, I'm going to bombard you guys with practice. We must practice this thing. Like even if it's just one coin a day, let's just see how we could practice, and of course, like I said, be accountable for your what for your knowledge. Be responsible for your learning. The ones I've taught you is just the one I can remember. Trust me, in as much as I know I've studied this thing greatly, but the reason I can vomit here is because of this only the one I can remember. If you want to know this thing well, I'm gonna use Google. I'm still referring back to this website again, babypips.com. Very, very sweet. Very, very, that's why they call it baby pips. The English there is very, very sweet to understand. It's possible even if you read it there, you're even going to understand it better than I did, sir. And then the baby pips is, like I said, just like a forex school. Okay? The moment you just go on the baby pips, you can start just go babypips.com, then scroll down. You're going to see their is it forex academy like that. Just start taking the course. It's very easy. Okay, they'll even be giving you progress at the end of the day. Okay, you're going to be seeing your progress. They'll be asking simple questions, then you'll be taking some small exams. Okay, so they're going to help you to understand this technical analysis very, very well. And like I can tell you that if you see, let me even talk about that. That told you that changed my mindset. I was just going through YouTube. I was learning something like that because the way I learned is that I learned from both forex and crypto traders. Okay, so even if you're a forex trader or a crypto trader, so far as you can give me I can learn something from you. I watch your channel. This particular, I was watching very small boy, very young guy. I swear, this guy is just barely 24, is like that. I was watching this guy on YouTube channel. Come and say this guy was like, you need to see this guy cast. Like God, this is going to change people's life. This thing we're doing here is play. We need to this thing, but we need to master something about. It's going to change our lives and those of people around us. Okay, so I want you guys to actually say you can see this thing can change. You just need to believe it. I love the energy I'm seeing for you guys. I know that you guys have believed it's going to change your life, but then you need to put you need to put the action there. Don't underrate the effort. Don't underrate the effort. No matter as they tell you that I can ginger you, cryptocurrency go change your life. If you don't put in the effort, if you underrate the effort that's required, you know go change your life. You need to actually on your own part play the part, play the role. Practice. Okay, use YouTube. Like I tell you, even till this moment, my battery is almost dying now because since morning I didn't even read any book. I was supposed to read a book today, but I didn't read any book today because I was practicing TA. I was writing too. As I practice, I write also. Okay, so that's what is making me to be very, very good at that. And of course, be flexible. Okay, communicate with each other, and then you are going to grow in the market. Okay, so that brings us to the end of the training. I trust you all got value. So in the next 2 seconds, I'll be cutting the section. So that's I just say I should show my face so you guys can see my big face. Okay, so guys, peace out.